Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been America's foremost precious metals brokerage firm since 1972, helping you build a strategic precious metals portfolio. Call 800-525-9556 to buy gold, silver, platinum, or palladium today, or go to McIlvaney.com. Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, and with a little bit of a look ahead as well. But too much to talk about with a little retrospection here with everything that's transpired in the last 7 days, even the last 2 days with the precious metals. Miles, why don't you kick us off with a brief summary?
Yeah, I appreciate it, Tori. So we're looking at gold after jumping back up above 1,800 to sitting back down now at around 1,725 at your medium-term 382 fib correction level. Still not enough to write home about, but gold obviously still continues. The little short-term decline we started back at around the middle of 2020 after taking the rampant jump up. Silver, for the first time since hitting that peak, also middle of 2020, actually broke into bearish territory, pushing below the increasing floor that we've had established for about a year here, and below the 382 fib on its way down, I would argue, to the 50% line at around 2090. So silver currently sitting at around 2150, and I'd expect to see a little bit more downside, at least in silver, until we readdress where silver's going from there, based on what this fall and winter end up looking like. And finally, platinum also pushing below the 50% line, bouncing back up last week, having a big move up over $100, but back down right in between the two at around $952 today. Platinum should have a pretty strong floor set back in September, October, November last year at around the 618 fib, around $880. And it's possible we could see platinum take off another $75, $80 on the way down to that potential reversal point.
So everybody's asking the question, why are gold and silver going down? I know you guys are hearing it from your clients on a daily, minute-by-minute basis.
My clients are smarter than that.
And short answer, bond yields are up, U.S. dollar is up. When that happens, gold is going to go down. You had a little bit of equity market uncertainty yesterday, and gold wasn't down. It was relatively flat, but silver here in the last 2 days, as Miles mentioned, has turned mildly bearish. But the short answer is, look, you've always got to look and see what the U.S. dollar index is doing. It doesn't mean the dollar is strong. Robert, you were looking into some things that were maybe causing an artificial dollar rally as we've gone from mid-92 to mid-94 here just in a matter of 10 short days. What are you seeing in terms of the dollar strength?
Yeah, we've talked about over the last few months how the dollar could potentially rally into the 95, 96 range, and it's sure getting close to that. It's 94 and change, and could push up into that 95 to 96 range. And that may be it for the dollar rally if it gets there. And then on the inverse of that, gold and silver are coming down here. And I'm wondering, is this going to be the washout low? Are we washing down here with platinum, silver, palladium's obviously going down, but silver and gold and platinum are what we're really focused on here. Is this the washout low that we see that's going to be the low before the bigger trend resumes and takes those prices higher? My feeling is that that is a yes. I feel like the dollar is going to have this last push up in the 95, 96 range, come to some stopping point, which will correspond with a low in gold and silver, platinum, and then it goes the other way. And I think it's going to go the other way in a big fashion.
I would argue this is an important reminder to people who have been in the metals market for a long time, and certainly maybe a first glance at how you see markets move for anybody who's gotten into metals for the first time over the last couple of years. If we remember back to what happened, not in the 2008 crash, but leading up to it, and then obviously 2008 until 2011, when the stock market began to crash, gold went with it for a short period of time. You got to remember, we're dealing with two different sides of the same precious metals coin. You've got the futures and options market, you've got mining companies, you've got all these gold, precious metal, raw material adjacent investment options, as well as owning the product outright. When the market falls, futures contracts go with it. And I would argue we're seeing a market-wide, in all industry, decline right now. And where do people go when they sell off investment positions? They go into things like treasury bills short term. So, yes, we're seeing some issues coming out of the European Union, which is going to bring strength to the dollar. We're seeing some issues in the economy, which is going to bring strength to the dollar. And that's going to pull other things like precious metals and tangible safety assets down with it in the short term because of leveraged investing, or in this case, leveraged unwinding of positions out of some of those futures contracts. So it may be possible that in the long run, you are going to see volatility in stable assets because emotion is going to drive price movements in those assets just like everywhere else. But ultimately, when you average those moves up and down over time, you get that beautiful chart like I put up a couple weeks ago of gold overlaid over M2 money supply for a number of years, in that you may have some highs over and above the average, some lows down below the average, but gold is going to continue to preserve purchasing power long term with some bumps in the road one way or the other. And it's the bumps in the road we like to talk about because that's where the gain can come from.
Well, the bumps in the road, too, include the potholes because these dips are opportunities to add to your ounces. You know that you've got X% of your portfolio moving into the metals. Look for value. Palladium under 2,000. I hope that's a trend that continues. We need to see a ratio correction. We saw a 3-point ratio move in 24 hours in the gold to silver ratio. Yesterday it was 77-1. Today it's at 80-1 because silver dropped over 4% today alone compared to the 0.4% drop in gold. All that being said, you've got two other things that are going in silver's favor. One, the nominal value decrease, which Miles is going to show here on the charts, but also premiums had started to soften. So the price was coming down in physical metals because of premium, price coming down because of spot price, value going up because of the ratio relative to gold. All bullish reasons to step into adding more silver here. Keep an eye on that because commodities across the board, Miles, as you just alluded to, there's sort of a pullback here in all sectors. The everything bubble is showing that everything can come down as well, and that's all commodities. But the silver price could continue down, especially in a market environment where the equities markets roll over. If we finally get that long overdue correction in the equities markets, and it's in a short-term aggressive fashion, the white metals will likely follow. If we don't see that correction in the equities markets, this is an incredible opportunity, I believe, because I don't think that 80-1 ratio lasts. I think we come back down into the 70s and even the 60s when the inflation starts to rule the roost again and the white metals react.
Well, and don't forget, you're also looking at the current price of gold off of the highs at just under 2,100. So with gold sitting at 1725, that's still well above the shallowest reversal point you can have in gold, your 382 fib, starting in 2016. And it's only barely at the shallowest reversal point you can have from the most recent major move up in gold starting at the end of 2018. So gold has taken almost no reversal whatsoever at this point. Let's say we had a 40% drop in the Dow. Let's say 2008 happened again. The industrials are off 2,000 points. The transports are off 2,000 points, which is twice as much percentage-wise. It's like 12, 13% down just in the last couple months. We're seeing a big sell-off in the equities market. How much money can go into that market to prop it back up when everybody's locked into this discussion about extending government spending out right now? And which government agency are they going to shut down or threaten to shut down like they did the park system 10 years ago and the post office here more recently? I mean, every year we have the same conversation over again, forgetting that we just had it a year ago. How much money is going to go into the equities market to prop the equities market up when we're having the debate about what we should be spending government spending on? I don't think much. So my assumption would be going into fall, we're going to have a pretty ugly equities market. I hope I'm wrong. But if that ends up being the case, yeah, you can expect to see safety net assets come down with it, and the dollar's probably going to prop up. But we're talking about gold over the last 4 years, doubling in price and taking barely a 30% retracement off of that. And in the meantime, the dollar index has gone from 104 down into the low 80s. And in that same period of time, we've seen the dollar index go from 104 down to the high 80s. So who cares about a little bitty day-to-day, week-to-week jump back up in something? All you have to do is zoom the camera out to get the real picture.
So being down $350 from the high from a year ago does not concern you, and instead you're saying this is potentially a great buying opportunity. The bull market long-term is still in effect, and is still presenting you now with this opportunity as we pull back down to these support levels.
What I'm saying is gold at $1,270 is still in a bull market, and we're at 17 and a quarter now. We have so far to go before you would even begin to consider we've turned bearish.
Well, and I'll tell you what, we have so far to go before you would even consider that we've turned bearish in terms of the fundamentals. Until monetary policy changes, until there's a responsible debt ceiling, debate had and agreed upon and date set and figure nailed down, until the money supply starts to reverse, and then you see real rates of return start to turn positive, that's when you'll be concerned about a bearish bull market. Until then, the MO is the MO in Washington, D.C. The MO is the MO with the Federal Reserve. And then we're not talking about just domestically. Let's look at all central banks and the International Monetary Fund. It's print till you die. And because of that, you hold tangible assets and you hold the real money, which is gold, and you buy in these opportunities, and you don't get scared out of a market like it's an investment.
Well, speaking of policy, China came out with a new policy that tended to affect a little bit of the world. China declares all cryptocurrency transactions illegal. If you didn't see that, take a look at it. Plenty of articles out there. Quoting the People's Bank of China, they say virtual currency-related business activities are illegal financial activities. They say seriously endangers the safety of people's assets. Well, let's throw out a question. Does a virus endanger the safety of people's health? Do they care about that one to release that information out there in the world? Does a vaccine endanger the safety of people's health? Are they concerned about people's safety of people's assets, really?
No.
Are they?
They're concerned about government largesse and the ability to continue on in ways where they control the currency alone. Because aren't they coming out with their own?
So it seems. That's what the talk is.
So Elon Musk won't take your Bitcoin anymore. That's been, a couple months now. And now China won't take your Bitcoin. So I'm not entirely sure what you do with Bitcoin now.
Well, a lot of the Bitcoin world has the same type of mindset as those who buy gold and silver. I mean, it's somewhat of an idea of decentralized investment, having something outside of the system. But what you have is another system, which China obviously doesn't like, and maybe the social trends of China affecting the U.S., maybe the U.S. follows suit here with their policy. I mean, there's been a lot of talk about cryptocurrencies and regulation and things like that and how it threatens the dollar value. So it's going to get really interesting and maybe a little weird here when we talk about governments doing these things, saying that it's preventing you from a lot of risk. But in the markets, the last time I checked, that is what you're doing, is you're taking risk when you do just about anything.
Seeking a return.
Yeah, I mean, sitting on your couch eating potato chips is taking a risk for your health. So taking a risk, allowing people to have that risk and make that decision on their own, boy, you get into really weird territory when you start saying that it's for the safety of people's assets that you don't allow them to take their own risks.
That's talk that governments will say if they decide to come after IRAs and that sort of thing. It's always to rescue you from yourself. Well, you want to rescue your portfolio from itself, don't invest in bonds, because we talk about gold being a key part of any investment portfolio. You don't have to flee any one asset class, but don't fly into bonds as a safety. It's the return-free risk of all investments. It's 1.55% is the yield right now in a 10-year treasury. So you're going to lock up your money for that long only to lose 11% a year in inflation. Why go for the bond market? That's exactly why you position a portion of your portfolio in gold, in a tangible commodity.
Well, think about the people in China who are invested in the cryptocurrency world. What just happened?
That wasn't
They got to
unhealthy.
take it somewhere.
Where is it now?
They've got to find their liquidity somewhere, and lo and behold, the treasury bills are up. Shocking. What a shocking correlation.
The Chinese people, they have a tendency to like gold, like India. People in India buy a lot of gold. And so they have this ingrained idea, not necessarily trust their government. They want something outside the government's control. And so here you have a huge block of people who've been investing in cryptocurrencies now made their activities illegal. And if that doesn't tick them off, then I don't know what will. And what alternative do they have now besides going to gold? So you have a huge amount of people who've just been eliminated from trading cryptocurrencies, decentralized idea. Where are they going to turn? Are they going to go back into the currency? Are they going to make other investments into the Chinese markets? I would argue that a lot of that money that would have gone towards cryptocurrency trading is going to look for an alternative that is outside the system, and they're going to go to gold. So it's actually ironic to see gold kind of sliding a little lower here when you've just turned a lot of people in China to looking for an alternative investment.
All right, so before we leave, you want to know why to buy gold? $1.2 trillion infrastructure spending package. You want to know another reason? The dollar rally is not sustainable. Want to know another reason? $3.5 trillion reconciliation bill. Want to know another reason? There's no debt ceiling right now. Potential government shutdown and the instability that comes with that, like Miles alluded to
I'm
early in the
laugh
show.
at that every
Potential
year.
default.
I'll
Yeah.
laugh at it next
Yeah.
year when we have a potential government shutdown again.
Potential default.
Full faith and credit, right?
Full faith and credit.
There's
So,
nothing Washington cares more about than their own paycheck. You think they're going to shut the government down?
No,
You're
that's
out
what I
of your
said.
mind.
They don't want to relinquish the power, the attention, even though it creates a little bit of a media hype. It'll stay open, but those are still very pressing and present moments as to why you own physical gold. Get your own money. Get out of that digital system or the monetary system that you're succumbing to in this environment, and just own your own asset privately, off the radar.
That does it for Golden Rule Radio this week. Thanks for listening. You can follow us on Twitter at ICA Gold, like us on Facebook, McIlvany Financial, our website, McIlvany.com, and you can always call us at 800-525-9556. Thanks for listening. Have a great week.